The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here on this Thursday, the 22nd of August. We're looking at the Dow down 21 at 40,869 after extending yet again. This leg B has started when it went 1 penny above the peak A of the 9th of August, had a mild pullback on the 12th, and then the 13th it broke out. So ever since the 13th, we've got 1, 2, 3, 4, 5, 6, 7, 8. 8 higher sessions, meaning this floating letter B, and it's in a buy mode, is still extant. And therefore, if there is a lower high, let's just call 41,026.64 the high for the day. Any lower high tomorrow makes a peak B. And I suspect that we're going to be we're very close to some kind of a peak B. I wanted to show you this. I'm going to do this with I'll do them one at a time just to show you this in more clarity. This is my tool of last resort. It is let me go to the Dow, there it is. So this is the daily chart. This is the Dow flipped to a positive buy mode with that green line, the 9-period moving average in the daily chart going positive. And we just starting to get a little bump there, a little double top. So that means we could be pulling back here. The all-time high that was made around about the 17th, that's still there. It hasn't been taken out. We're looking at the S&P. And this is the reason why I've been saying that it's still very bullish, even though I expect some kind of a pullback either today or tomorrow, or at least with having made with the Dow and the S&P, and I believe the QQQs having made new leg B extensions today, we're very close. So maybe the Fed does something tomorrow and we get a big pullback. We'll see. The day is young. We're barely, 40 minutes into the trading session. So here we go. See the S&P, very big distance between the price, the 9-period moving average, which is way over the 14. So now I just wanted to show you this. I'll do this. I should have done this right away. So the E-mini popped to a rogue wave. This is what I call a rogue wave. This is a perfect rogue wave where all the technicals will start to deteriorate. And if you were thinking of shorting, you would be correct. But what happens with a rogue wave, the sign at the beach says high tide at noon. At 12:06, you're walking out and you go onto the furthest rock. You think, this is great. This is the way it's going to be, a beautiful day. Just going to sit here as the tide goes out. I can put my towel down. I can relax. I can put my dark glasses on. So whatever it is, start having my sandwich. And at 12:06, there's this wave that just comes soaring up. And you're soaking wet. You wipe your glasses. You look back, and the tide's going out. You don't know what happened. That's a rogue wave. And here it is, a rogue wave. Everything comes down. And what's interesting about the bar of the rogue, this is a 1-minute chart. The bar of the rogue wave, it doesn't matter whether it's a daily or weekly, but that big spike when all the technicals, look, the MACD was down, stochastic was down. Everything was suggesting that the tide was going out. And then look what happens. One pop to the upside, and that very bar says that it goes above the previous high, and the people who were short say, oh, I knew I shouldn't really just be, what was I thinking? I've got to cover, and they cover. And then the people who were long and got out and saying, oh, this is choppy, I got to say, why on earth did I get out? It was going up. I should have stayed long. And it holds above the previous high just long enough for everybody to have changed their mind. And then that very bar closes towards the low of the bar of the sessions, the previous sessions, and then toodle just goes merrily along its way, very weak, and that's exactly what happened. Then what happens is a bounce, more than like a 50% or a 3/8, 618. And then what happens is, let me actually put that in. Let's see what it was. And of course, Larry's doing his show tomorrow, so it should be a very interesting time. There you are. Yep. Oh, just above. It went to yeah, so it bounces to about 76%. And then what happens is turns down, comes back, makes a dreaded H pattern, and then continues down. And I have an alternate count here in the 5-minute chart, but the 10-minute chart was really great because it looked very much like that would be a leg E, and it was a peak E. And now we've come back to the 200-period moving average. So let's go back to our story. And our story is digestive phase down 97, S&P's down only 3. Very mixed market here, all different numbers each day. What we're looking at is the Dow has gone to a leg B. It's just pulling back. The 9 is over the 14. Price is way over the 9. MACD is good. Stochastic's fabulous at 90%. On balance volume, just a tad overbought. Relative strength is good in the daily. Weekly chart, all the technicals are still good. But wait a minute. Let's see if that's the same with the S&P. Yeah, it's even better on the S&P. It got to 56.43, and the all-time high is 56.69. You know that it could do that in the blink of an eye. But at this particular point, it's just pulling back, digesting some gains, V-shaped pattern in the weekly, very positive. And look at that monthly chart, that inside track repellent zone just keeps repelling the price. We'll see what happens by the end of the month. Let's go to the IWM. That's a little bit weaker. That is down $1.10 at 214.36. Gone to a leg C, but it has filled the gap. That's important, but it needs to go into that ugly candle of the, what was that? The 1st of August. All right, and the monthly chart has gone to a peak C, and we'll have to wait for the end of the month to see how close it gets to the high of 228.63. That is going to be that's a tough thing to get to, but it might take a couple of months actually. Let's go on. We want to go to the SMHs. SMHs tried to rally earlier on. It went. This is an extension of leg B, and it went to 253.32 and is now at 249.34, down $1.29. Not a big deal, but it is down from the intraday high. The weekly chart is still pretty good. Let's go to gold. Gold is now, oh, what a big move, down 32 at 2,515. What's important is I've got this as a B. I'm not going to make any change to that because the 9-period moving average is still very good. The MACD is good. Stochastic's flat at 85%, 86%. That's good. On balance was a tad overbought. Weekly chart, I've got this as a G/C. I'm thinking that I'm going to keep it as a C, but I really have no choice but to put in so that you know you've got to be wary, because what happens in the daily chart is going to be, I'll tell you why, because if the daily chart actually takes out this low right here, the low of the 15th of, this is the continuous contract of 24.69, if it takes that out, I have to consider that that was an alternate count G/B, and then it becomes a G. And that just says now you're going to have a little bit more of a digestive phase. I'll be back. Dow's down 80, S&P's up 0.13. Basil Chapman, Tiger Commissions out. We've got a lot of questions, and we'll get to it in a moment. I'll load it, please.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
There's no better time than now to sign up for Live Trading Fridays. Why is that? That's because the next trading session, this Friday, August 23rd, coincides with Jerome Powell's Jackson Hole speech. Chairman Powell's comments have the power to greatly move the market, and Larry is ready to capture those gains on the moves. Use code LarryAUG24 at checkout to save $50 off your first month. See you there, Tigers.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi, folks. So the question came in, how far do I think the gold contract will go? Now, let me just show you something very interesting. Look, here's the dollar. Dollar's been making lower lows and lower highs. It's trying to rally today. It's up 27 ticks at 104.44. It went right down to the weekly 200-period exponential moving average of 101.58, I think it was, yep. And now it's at 101.44 after having gone testing the 101 area. So as I see it, excuse me, you've got in the monthly chart, you've got this pattern. I didn't draw it in. I said there's a chance that we can make a cup formation and then stall, but I talked about it and then didn't do it. And the whole thing is that the dollar, and I must say that we've been long the dollar since 2018 through all the ups and downs. It went huge to the upside, then huge to the downside. The stop held on the UUP, then we ran back again to 100. Well, I don't know if it's the same price, but it was the high of September of 2022. That was 114.78. Yep, it's still 114.78 because it gets smooth. But this is the pattern that I'm looking at, and this is very important. And one of the reasons why I say that it's very important is because, I always look at the dreaded H pattern. Comes three patterns. One is the straight up, straight down. The other is the cup. The other is the arch. So you can mix them, 1 and 2 and 1 and 3. This is a 1 and 3 where it comes down sharply, makes the dreaded H, fails at a peak B. This last one, look, that was a peak B minus because it failed. This was a peak A and it failed. So we don't know what's going to happen here. At this point, you should start to see if there is a rally, a much longer and bigger arch formation, but we haven't got to the point yet where it's even shown that it's starting. Maybe it's today, but I'm not sure. I think that maybe a little later on it does that. But this lowercase h can become a lowercase m. So the second arch, how it tests the previous high is going to be very important, and how it treats the left side low is very important. So what do I mean by that? You've got it right here. You've got one arch pattern. Here's your H. Here's your second H. So that's your second arch, that is. There's an M. And how we deal with that first, the left side low is December of 2023 at 100.62, but the most important one is at 99 something, 99.58 back in July of 2023. So that is a year ago, and you've made these arch formations, and the technicals have continuously weakened, and for this month you've got an S. For the first time, you've got an S in the, meaning a sell signal. We have to wait for the month to finish in the monthly chart of the dollar, but it's the first time it's happened, even with this huge move, because the amplitude of the 9-period moving average over the 14 was so big when it made the high in September. It continued for another month, and then it started trending down. With that rally that was made last year during the summer months, it helped the 9-period moving average stay green even when it pulled back. This is the first time that is potential. And once it hints at going green, going red, you've got to think that that is a negative. So it's a hint to say the dollar will be susceptible to a much deeper decline if it takes out those two levels that I was talking about, especially 99, right? Meantime, it's trying to bounce, and you've got the support of the 200-period moving average. Why do I do that? Because gold, there is a relationship. It isn't a direct relationship, price to price, percentage to percentage, but it's directional. So here is gold doing the exact opposite, but in a much bigger way. Because look, that cup formation that goes from a U to a W, this is, let me just pull this across because it's taken a longer time. Look at that. U, W, breaks out. This is a different pattern altogether. And that's what I've been saying for about a year and a half. I've been saying this is the first time that I can recall that all the synchronicity of the moves in my key icons, that is Bondi, Crudy, Dolly, Goldie, and Vixie, that's bonds, crude oil, the dollar, gold, and the volatility index. It's just not there anymore. It's changed. In fact, you've now got them moving in sync, or they go counterpoint, or they go, one is much stronger than the other. So all I'm saying is that gold is in its own trajectory now, and I have to say that there's a good chance that the Middle East conflict is really a part of it. It's not, the dollar is the world currency situation. Gold is more a fear factor than anything else. There are other things, obviously, but that to me is what I always look at, coming from South Africa, a gold country during the Depression. Gold, I remember going through it. I didn't ever discuss it with my father. But I remember looking at the charts and then looking at all the different activities in South Africa during the 1930s. They were not impacted like the world because they had gold, and gold was rallying very sharply. That's what happens in really bad times. Gold initially pulls back with the market, and then it goes on its own trajectory to the upside. So I'm just looking at this as a separate entity altogether, and gold is holding well, but I think that gold is going to go to higher prices. I don't say how high, but higher prices. I do have a target up here. I'm just going to mention it. I shouldn't have even mentioned it, but it's at the 26, call it 2,700 area, but that's a long-term outlook. More importantly, where do I think it's going? I think it's going to hold in it's at 225.10 right now. I wouldn't be surprised if this low right here that I was talking about at 24.70, if that holds. But if we do get down there, it means that this I might have to call that an alternate count. That's really what I'm saying. Let's do silver quickly. Gosh, I'm doing stuff I wasn't going to do. Silver's pulled back sharply, but it's a huge leg A to the upside. Now a peak A. It's holding quite well, but it is making low lows and lower highs in the weekly chart. Silver needs to get to 30.95. Let's call it 31. Has to get to 31, I'd say, in the next 2 weeks, preferably sooner than that if you want to see a good arch, for a cup formation forming. Otherwise, it's going to stall. Let's do high-grade copper quickly. High-grade copper is pulling back, I believe. Yep, down 0.04 at 4.14. Looking at crude oil is it's trying to find some stability. But look, This is a very important support line. I'm going to make this into a Chapman wave right there. What am I going to do? I'm going to make that green, and now you're into a very important inside track buy zone. You don't want to become a repellent zone. This is where it has to lift off, but it hasn't. So this is very important. You can see in the monthly chart, it's the same thing. All right, let's go to the TLT. The TLT right now, try to get to a leg D. In the weekly chart, stalled. It's just stalling right now. It's down 85 at 97.88, down 0.86. And here you are on the 9-period exponential moving average. I suspect that I think I'm correct because it's gone this high in gray leg B, that is going to get closer to the 99.94 level over the next week. However, if it closes under 96, that's a real problem. Okay, I'll be back and we'll talk about questions about Zoom and Harmony, gold, and some others. I'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
right, so I see in the Tiger YouTube, 3 drives says, they quote someone who says the Bank of America's unrealized bond portfolio losses now exceed 100 billion. That's about the equivalent on a pre-tax basis of half of the company's tangible common equity. Wow. Yeah. So he says moved all Bank of America cash equity to JP Morgan. Well, I'm just quoting, I'm reading it and I'm saying, oh, wow. I mean, we actually own Bank of America because we've had it at least over the last, I should go through it, but I'm not going to go through it. About 8 years, we've had it maybe 5 or 6 times where we bought at the lows and then ran it all the way to the highs, taken little bits off all the way, and then as it came back down, we got out of it and then did it waited for the next low, then did it again. This is the longest ever that we waited to get back into the position, and we did that. I'll tell you when we did it. We got Bank of America. We went along at 31.98 back on the 13th of December. We've got a fairly tight stop in with a profit, but we've taken lots of little bits off with very nice gains, and then it pulled back. And I'm still holding that for the subscribers to the opening call. But I've been watching this rally, and it had a peak D up in the 44.44 area back in July, and then it pulled back pretty sharply. It went all the way down to the 35s. Now it's up at 38. It hit the other day. It hit 39. I'm watching it closely, because it's a big tell. You know, they've done other things correctly. They've passed all the other tests, but wow, I did not realize that they had such a big bond portfolio. How that gets resolved, it's usually a tough way to resolve it. I don't know how they're going to resolve that, but anyway, I'm watching this closely. Meantime, we didn't add to it on this bounce at all. We just kept that position. But I'm watching it. Let's go to JP Morgan. JP Morgan is different. It led the move up. It made all-time highs. It's close to its all-time high. It's at 215.02, up 42 cents. Peak A, peak B, just missing C. But look at this. You've got your, I'm going to do this right now. I'll just make it, I'm not going to do the, I will. This is your left side, right side price time match right here. I'm being distracted a lot today, huh? I wasn't going to do anything with Bank of America until I saw that, but I thought, hey, if that's public knowledge, I need to print it right here. So this today would be the day that it would have retested that peak D on the 17th of July at 217.56. So let me just show you. This is a D. D is where other things can happen, and boy, did other things happen here. D. And a pullback, so that became a down by a sell signal to sell mode, all the way down to the 190s. Now it's at a really good move. This is in a buy mode to the upside. All the technicals are very strong, and I'm kind of agreeing with you, 3 drives. And the reason why I said we're going to go to, even though JP Morgan is looking better, and there are 1 or 2 other stocks as well, because it has the brokerage side of it, I'm going to stick with Bank of America, and also it had the potential for a percentage gain at that price that could be the equivalent of anything, and it really was. So we're watching this closely to see exactly what happens. So we've got that, and this said that on this basis, going for that high, on the whatever it was, the 17th of July, down to the low of the 5th of August, the number of bars to the upside is exactly the same today, but it's under the price. Now what happens typically in this particular pattern is that I then have to choose another level. I would then choose this peak, and I'd move it over 2-3 bars, and that would take you to maybe Tuesday or Wednesday of next week. But most importantly, what happens is that when it gets very close to the price and you've used up your time, there's very often a little bit of a pullback, and then there's a break that goes quite a bit higher than the left side high, and then it comes back under that particular level. So that'll be JP Morgan that we're watching. All right, now I have to get to those questions. The first question was what I missed yesterday, and that was Sandy's question. Hi, Basil. Could I get your opinion on Harmony and a possible entry? Thank you, Sandy. So HMY. Okay, this is Harmony Gold, South African gold miner. Monthly chart, all-time high, leg E this month. Not all-time, because I don't know. I can't remember. I don't think it's an all-time high. No, it can't be an all-time high. Can it? No. Wait. Go back. All right, I don't want to go back far. Yes, it was up in the 18s and even higher. I don't know if there were any splits or anything like that. But yeah, it's got a. I'll do the cup formation. It's a ball formation where it can go to with the next resistance level. But right now, I just want to do the monthly chart is in leg E. It could even be an instant restart, but it is a leg E. The weekly chart is in a leg E. There could be an alternate count, could be an E/B, but I'm calling it E now because the 9 is still over the 14. It looks like the lettering in the Chapman wave just goes sequentially higher, and that's what we're doing. And it's a peak C in the, could be an alternate count, but I'm calling it a C for now in the daily. So thank goodness that I didn't see this yesterday because it was doing so well. I would have said to you, nibble here, but really you want to see how it holds the middle of this candle. And that's this candle right there. And that would be at 10.76. Well, it's gone under that today. And technically, the MACD is still good. Stochastic's fabulous at 92%. On-bounce volumes a tad overboard. Relative strength has pulled back since it made that doji candle peak C at 1140. Oh, it was 1137. 1137 3 days ago. So, Sandy, what I'm going to recommend is this. Because the technicals and the daily are still very strong, it's at 1051 right now. Now I can say to you, start a small position here at 1051. 1025 is the 14-period exponential moving average support level. If it goes underneath 10 in this particular pullback, it's going to take a little while to get back into the mid-11s. So I'm just saying, I like it based on the weekly chart. I like it based on the monthly chart. I'd like to see you in it based on your question because you see this is what you want and you wanted to get my opinion on a possible entry. I'd have it initially, don't get the full position, but I'd start a small position here at 10.52 and then we'll see get 10, 30, 10, 20 in the next 2 days. How it handles that is important. We'll go look at it again tomorrow.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust. The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Facts. I just want to do this Xpeng Inc. designs, develops, manufactures smart EVs, China. Look at this double bottom, this big pyramid pattern from the 618 low that was made in 2022. It pops up into the 20s and it comes all the way back. Where is it right now? The other day it was in the 650s and now it's at 695, having popped over to the 7s. No, I'm just suggesting that the whole thing about the EVs, I just think there's uncertainty right now. I'd be really careful about that. I mean, look, Tesla is something different altogether. Tesla is, it's a different company. You can't call it a technology company. You can't call it an automobile company. You can't call it a battery company. You have to call it every one of those things, and there's always a surprise. So that's very different. And even there, wherever you go now, you see Teslas. Whatever city I've been in, I'm always surprised at the number of Teslas. Even overseas, where was it? Now, even in England last year, I was surprised at the number of Teslas. Okay, so what we're looking at here is. In the day, Tommy was talking about the Jetsons, and I remember I spoke about this. I've spoken about it for over the years, decades now, because I have a friend that we always used to go to we still do it when it happens. It hasn't happened for a long time. The auto show in Boston. It's the national show. Last year was just the local show, but we always go for decades. And I remember back in 2003 or 4, there was a Prius there, and I remember my friend saying, I can't wait. He said, just another 10, 15, 20 years, gas automobile gone. I said, no. It takes 50 years. In my experience, looking at all these different technologies, it takes 50 years before you can go from concept to turning the key and know nothing about how it works. You just press the button and it goes. And here we are. Look around. It's still, 7% or 6% of the nationally electric cars? It's going to take a long time. So Jetsons, hey, A long time. And the noise, as it is when you hear one of those drones, even with the battery operated, the propellers themselves, they have to find a technology that's much quieter. You can't have that. Can you imagine the crash above your house? It's going to be a long time before you got automobiles up in the air. It'll happen at some point, but not yet. All right. So, hi, Basil. I hope you're well. Wondering if I'm fine, thank you. Wondering if it would be possible to get your thoughts on the Zoom ZM chart. They had a good earnings last night, and I've been wanting a position for quite some time. Will you consider taking a starter position here, or is it safer to wait for a close into the 75s? I'm looking for a long-term buy and hold, and I'm not in a rush. Any advice would be appreciated. Thanks for all you do, Chris. So, Chris, as I see it, when someone says they're looking for a long-term buy and hold, does it matter if I say to you, you've done your homework, so this is a company that you believe in. So does it matter to you if it's trading right now up 7 almost at 67.07, when just for a long time it's been tootling around in the 50s, couldn't get out of its way? Because if you're looking at this chart that I'm looking at here, Zoom Technologies, let me open this up, the monthly chart. You were once upon a time you open up, that was in 2019, and the April of 19, 59.94 is the low. Usually open at a round number. Yep, 65 round number. So 72.47 close, 74.17 was the high, and it zooms up. It goes to 107 actually. Then it comes back down, retests at 60.97. 60.97. Oh, sorry, the 59, it was 59.94 was the low. I wondered what happened because it didn't take out that low. And then it goes peak A, B, and C, and that C holds until it becomes a failure pattern when you come out below 59.94. Well, 59.94, 60.45. I'm trying to find if ever there's been a dip down below there. 55.78. I knew there was a low, but I couldn't remember what the number was. Yep, there was. So here's your base of support. You've got this huge, almost Eiffel Tower patterns, really like a pyramid, comes down. So number one, it's been a total failure. After that spectacular move in the COVID era, going to the 2020, 2020 high, COVID lasted a lot longer than that. So that was the high. In October of 2020, it goes to 500. I remember it was up in the 500s, 588.84 with a 447 open on a monthly chart. It opens at a round number, and that stays 477. All right, well, that was goodbye. So this is what I'm going to say to you. If you've done your homework and you like it, 6 points, 3 points, I'd say there's absolutely no difference. 6 points maybe because it's had such a tough time. Look at this, the big green candles, and then it fails. So what I'm going to say is this. Look, I've got an A here, and it's even higher than that. It went to 67.34. So what I'm going to suggest is this. If you like it, it's better to get a feel for how this gap up holds. It's only either a brand new leg A. Oh, no, it has to be an A because it started a brand new buy. Yeah, it's lower. This is a brand new leg A. Could it be an A failure, that Eiffel Tower straight up and straight down in the daily? It could. So this is a very tough one. If it was only 4 points higher, I'd say have no problem, start your position. So I'm going to say have 3 positions. One is right here, 66.94. You just tiptoe in. Why? Because if you're correct, and there's no reason why this company shouldn't have, on everything, this Zoom video, shouldn't have been the darling. It had everything going for it. It's done everything wrong all the way since that 2020. So I'm just going to say to you, I don't feel confident that the the CEO and the people that really make the decisions are making the right decisions. Yep, they've now had a good profit. I don't know why. It could be that they've cut back a lot. I don't know. But I am saying that this could be a starter position. Let's look at it again in 3-4 days. If by early next week...
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry August 9th and 23rd for more live trading action. For this month only, use code LarryAug24 at checkout to save $50 off your first month as a subscriber to Live Trading Fridays for his live trading sessions, where you'll sit right beside him as he trades the market live. For this month only, enter code LarryAug24 and save $50 off your first month. For all the information and to reserve your spot today, visit the front page of TFNN.com.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com and hit Watch Tiger TV. That's TFNN.com. Then hit Watch Tiger TV.
Hi folks, so just to quickly wrap up on Zoom, I'm saying nibble here that was at 66 something, maybe just under 67.30. Nibble here, or maybe just start your position. But it has to be very small. I need to see that this isn't a one-off spike to the upside. It's done that before and has failed. I just don't know why under these conditions. I think there's just too much competition for Zoom, price-wise. So I'm just saying, let's look at it again in a few days' time. Start a little position, and we'll come back. Next question was coin. Now, for those of you who recall, we've been looking at this, and I've been saying that peak F top that was made in March up in the 280 area, I think that's going to be it for a while. We came down to the 200-period moving average in the weekly chart, balanced. Daily, it's sitting on the 200-period moving average. I just don't see it going anywhere. I'm going to draw a rectangle in. I'm going to say this is what I think. It's stuck in a range between 216 and probably 183. For the moment, I can do a little more tomorrow because I've been negative on Bitcoin for a while, saying that I think that it made a top and it's making lower lows and lower highs. It'll come back, but right now it looks like it's under pressure. So we're looking at the 9-period moving averages. As I see it, Powell, I don't think he's going to do all that much. I don't know what he can do. He's going to have to say things are good, things are bad. And it's a really mixed market. People have not given up their buying. If you look at the statistics, buying pressure is still, their buying of goods is still there. And even look at the way the housing market popped up. So I think that he's still under pressure. And then it gets too close to the election. They can't do anything. So I think that whole interest rate thing, set it aside. I'm just looking at the Chapman wave methodology of looking at the 914, still very positive. This is in a buy mode. I might be totally wrong, but I think we will be going towards the all-time highs in the key indices. And when we get to D, we've got to make decisions. That should be maybe next week sometime.